Good morning, everyone. It's Shauna, the tax goddess. Now, today, besides telling you that we have a really awesome rap about a tax topic, but only CPAs get thrilled about that kind of thing. It's actually really cute. We are covering basis. Now, what is basis? So I'm going to start with the common example that most people know, which is stocks. Okay, so when you buy a stock, let's say you buy a stock at $100 and then you sell the stock at $150, your basis in the transaction is what you paid for the stock. So your basis in this case would be $100. Now, Shauna, that seems pretty basic. Why are we covering basis? Why is this important? One of the pieces that a lot of business owners miss, and especially S corporations and C corporation owners, is that if you are taking distributions from the company, okay, so let's stick with the S corp for this example. If you are taking distributions from your company for your blood, sweat, and tears that you've put in for all of this effort and work that you're doing, if your basis in your company is not high enough, when you take that distribution, you could actually have to pay extra taxes on the distribution. Now, that doesn't seem fair and it doesn't seem right because, of course, I earned that money. I made that money, okay? But the basis of a company is something that is tracked from day one of the company until the company ends. So the basis of a company, let's say day one is $0. You made $1,000, so your basis is now $1,000. Well, if you made $1,000, you pull out $1,000, right? Which means you're back down to $0. So it can go up and down, up and down, and up and down. What most people don't realize is that if your business has any kind of debt, so if you have a credit card, if you have a line of credit, if you have a loan, business loan, an EIDL loan, this is kind of messing people up these days. If you have any kind of debt, your basis may not be as big as the profit that you made, right? You may have been spending money on debt. Well, that doesn't give you any basis. You didn't make any money. You're spending money on the debt, which can actually create a negative basis. So the company may look like it has money because let's say it's got this big EIDL loan or a line of credit. It may look like it has money, but your basis is negative. So if you take money as an owner, as a distribution out of that basis, you actually have to pay tax on the amount of money that you took out over your basis, right? So you can't go negative basis for distribution purposes. Now, I bring this up because there's two main issues with this, okay? The first one is many tax preparers, many CPAs were not tracking basis for years and years and years and years. So if you have a company that is 20 years old, but you don't have your basis records, the IRS is actually out looking for these tax returns where the basis is not reported. So a couple of years back, they added a new form. It's called a 7203, and your tax preparer is required to fill out that form for you, and it's got to go to the IRS. That form is specifically your basis. Okay, so that's the first thing. If you are an S corp owner, especially, and you do not have a 7203, go check that out, get it filed, get it handled, go calculate your basis now. I know we're just heading into filing season for last year's taxes, 2023. So make sure that you have that 7203 form in your tax return if you're an S corp owner, okay? Now, secondarily, you may have taken out distributions when you had this debt and you didn't have any basis, but you didn't pay tax on the distributions. The IRS is looking at that too, okay? They're going backwards. When you do that, when you take out a distribution that is really from some sort of debt and you're supposed to report it, that reporting process happens on your Schedule D, where all of your stock transactions, any other kind of capital transactions happen on Schedule D, okay? So the IRS is looking for people. That's why they want that form, that 7203. They are looking for people that didn't fill out the form or filled out the form, but didn't report the Schedule D capital gain, didn't pay the proper taxes, okay? So now we do want to make this a little bit lighter because there are some benefits to basis as well, okay? It's not all about the bad. Basis can actually help you take losses. So let's look at COVID, one of our favorite examples. Maybe you had a great business that was making tons of money, so you never had negative basis. This was never a problem. You were making tons of money, but then COVID hit and your business just tanked, right? So now you have these huge losses. You need basis to be able to deduct those losses, right? So as long as your CPA was properly tracking basis, making sure to use basis to your best benefit, right? you would have been able to deduct your losses with no problem. Those losses can offset things like W-2 or interest income, or maybe you had to withdraw out of your IRA to keep your business afloat, any of these things, okay? So very, very, very important that you have your basis right. And if you decide to go listen to our awesome, we have an in-house rapper at Tax Goddess. He created a rap for one of our clients where basis saved the day. So if you want to check it out, we'll put the link to the YouTube of the company rap about basis down below, and we'd love to have your feedback. So if you have any questions or anything else you want to cover, don't ever hesitate to reach out to the team and I. We are experts in this kind of stuff, right? We love making sure that you guys are getting the best tax deductions using all of the different things available, like basis, to make sure that you are keeping every penny in your pocket. So reach out to our team, taxgoddess.com, and can't wait to help you make sure your basis is correct so you're getting to keep every dollar you should. All right, we'll talk to you soon. Have a great day. Bye.